Good morning.
Hey, good morning. How are you?
Very well, thank you. Where are you joining us from this morning?
I'm in Dallas-Fort Worth, Texas, opening our newest Happier at Home franchise. So remotely, and it's beautiful here. Weather is great, so we're doing well.
Love it. Well, congratulations. Let's move right into it, though. We're talking taxes. It's that time of year. Every year, I feel we see changes to tax code and tax law, and people are racking their brains trying to figure out what's going on. What do children of maybe some elderly parents or somebody who's looking after an elderly neighbor even, what do they need to know this tax season?
Well, one of the most important things to do is to make sure you have a great team on your side. So connecting with an elder law attorney, financial advisor, financial planners, that sort of thing is really important because we can give you some general guidance on some great ideas and some changes in 2022. But making sure that you're connected with those that know your situation is a really important thing. But one of the things that changed in 2022 is the standard tax deduction for seniors, and that has gone up to $14,700. And that's if your taxes are fairly simple, if you don't have itemized deductions and things like that. So just having that in the beginning, knowing that type of thing is really important as well.
Now, when you talk finances and you're speaking with someone, a loved one, again, a family friend, someone who's getting up there in age, sometimes there might be a little sensitivity just talking about the finances at all. A lot of people, I know my grandfather who had Alzheimer's, he absolutely refused to give up charge of household billing and all of that. And that certainly becomes problematic when you're struggling to get things together. So how do you approach that?
It is a challenge. One of the things is to make sure you're having those conversations early on. In the case of someone having Alzheimer's, they are not able to make those very, very important decisions. So you may need to get the court involved so you could assume power of attorney and someone that would be appointed to act in that person's best interest. But again, if you're connected with a great financial planner who, as a case manager, I am connected with professionals like that. So we can give you referrals if this is something you've kind of let go by the wayside. There are ways that you could save money, especially if you are planning in advance for your estate and gift kind of tax exclusions. You can actually give a very large amount of money to your family even before you pass. And one of the tactics of using that is so that then that interest is not within your estate when you're when you die.
And all of this we can do with a financial planner. And these are the people that will also talk you through like the deductions that you can get, the medical expense deduction, the early or disabled tax credit, all of these kinds of things, correct?
Right. And the medical expense deduction is a really important thing. It allows you to deduct any medical expenses that exceed 7.5% of your adjusted gross income. So people aren't aware of all these little caveats or tax code. You can give $16,000 annually to as many individuals with no federal gift tax before you pass. And you can make unlimited payments for your family's medical payments, tuition payments, expenses for as many people as you want without any tax consequences.
Deb Marcello, Happier at Home. Deb, thank you as always. Great advice for anyone out there. Congratulations on the new office, but I am going to make a request the next time we speak. We have you back here because we like seeing you in person. You're just enjoyable over Zoom, but we like the human interaction. Thank you again. You. All right, sounds good. We'll post all of this information on our website, foxrochester.com.